letting you know what I'm doing here with NIO, let me give you my 2 cents here on Andrew Left. Now, Andrew Left is the same guy that a few years back was short on Tesla. And what happened next? He ended up going long, turning bullish on Tesla. He's also the same guy that tried suing Tesla and Elon Musk based on stock market manipulation. Now, speaking of stock market manipulation, can you imagine a single post from a single individual can cause a sell-off on a stock? And this is basically what happened on Friday with NIO. NIO started selling off based on this guy's negative post on NIO, thinking, hey, cut the price target to half. That's a lot. NIO started selling off like crazy. A lot of people might have made some money. Some people are probably down on their account. Some people probably lost some money, maybe panic sold and stuff like that. Now, I'm going to tell you what I've been doing with NIO. But before I continue, I wanted to let you know, guys, all this is based on one person's opinion. There's going to be analysts out there that are going to, research a company, study the fundamentals, the earnings and stuff like that. And they're just going to give their opinion. At the end of the day, that's all it is. It's just an opinion. I'm sure there's a bunch of analysts that would disagree with Andrew Left here. Now, that's just my 2 cents on this, guys, okay? I don't like telling people, hey, you got to buy the stock. No, you got to stay, blah, blah, blah. No, I don't like saying that. I like teaching strategies of what I do on what happens on a stock if I'm ever down on it or when I take my profits. So I like teaching strategies. I don't like telling people what to buy. So that's just my opinion on that. But let me show you what I'm going to do here on the Robinhood portfolio with NIO. All right, guys, so here we are on the Robinhood portfolio now. On Robinhood, I've been trading with around $20,000 to $25,000 on a short-term basis and paying myself out, and then continue to make videos for you guys on different strategies. So I'm not like building a position just yet. However, you will find yourself in situations where you buy into a stock and you're going to be down on it. Now, this can happen for a few weeks, maybe a day, or you never know, right? Because we don't know what the stock market is going to do. Now, when you find yourself in these kind of situations, well, if you panic sell, you're going to lose some money. I was panic selling a lot when I first started, and I learned it the hard way. I lost a lot of money panic selling, saying, hey, this stock is not doing anything. I'm going to sell. It's just a small loss. I'll move on to the next trade. I would move on to the next trade, and same thing. I would, lose a few bucks here and there. Sometimes I would make a few bucks, here and there, but, I was losing a lot more than making more money. So I kind of learned it the hard way. Now I learned about options. It kind of gave me a different strategy that I can use even when I'm down on the stock. For example, here on NIO, I have 500 shares of the stock. And you guys saw my other video, I actually collected some money on a covered call. So technically, I'm down a lot less. Now, for people that are long-term investors, right? The best thing that you can do is probably just take advantage of every dip. Now, if you just started getting into NIO, for example, if you bought it at $50-something, why wouldn't you want to buy it at $40, for example, if you're a long-term investor? Now, that's just my opinion. That's the way I see things. If I'm a long-term investor, I'm going to take advantage of the dips, buy a few shares here, a few shares here, a few shares there, and so on and so forth. Now, if you're something like a swing trader, day trader, options trader, then there's different strategies that you can use. Now, these are the strategies I like to use when I'm down on the stock, okay? Now, first of all, I don't panic sell. And this is not to brag or anything, but the biggest loss I have taken on Robinhood was through options, and that was by buying a put on Disney. I lost almost $2,000 on a single trade. To me, that's a lot of money, right, on one single trade. Every other time, I just been down on a stock. And I've been writing covered calls, like, for example, on the TD Ameritrade account. I did a video a few videos back. It's titled something like, what do you do when stocks are falling or something like that. I have 500 shares of American Airlines on TD Ameritrade, and I bought them with an average cost of $15 and something cents. However, that was a few months back, and since I've been writing covered calls on them, I'm basically almost at break-even price, if not a little bit over, I'm actually up on it, even though it says negative on the total return. So this is the advantage of covered calls. It gives you a way of making money even if you're down on it in the meantime. Now, here with NIO, I'm actually down like you can see, but I've been making money through covered calls. Now, if I wanted to hold on to NIO, I can continue to write covered calls. Now that's the great thing about options, right? Now I already did some covered calls, but let me give you an example. Let's say if I wanted to get out of NIO, right? Let's say, hey, I just want to get out of NIO, but I don't want to sell with a loss. This is what I would do. Now, it doesn't mean that it's the best option for you, but this is what I would do. I would look to get assigned, right? Get assigned to sell my shares, whether selling near or at the money covered calls, or you can write out of the money if you want to just keep on holding on to it. But if I wanted to get out of NIO, I can either sell now, take a loss, which I normally don't do, but this is what I would do. I would write maybe a $44 call option for next week. You're going to say, why would you want to risk selling your shares at $44, getting assigned, right? You're going to lose some money. Well, let me give you the math on this, okay? If I get assigned, now the chances of me getting assigned to sell my shares at $44 between now and November 20th are great because it's really near the money or at the money, right? So let's say if I do get assigned, for example, right? So my total investment right now on NIO is $23,745 because I have 500 shares that I paid $47.49. That's my average cost right now. So you're gonna say, why would you, want to be okay with selling them at $44? Now, by selling them at $44, if I get assigned, that would be 500 shares times 44. It's $22,000. Let's assume I get assigned, right? So I get assigned to sell them at $44. I would get $22,000 back. You're going to say, okay, that's a loss. But remember, we get paid for these contracts as the sellers. 5 contracts would give me $25.75. Now, these are numbers from Friday, right? But let's assume I send this order on Friday. $25.75 is what I would get in premium for wanting to sell my shares at $44 per share. Now, these are options that you have, choices that you have when you're writing covered calls. These are ways that I would get out if I wanted to get out. I would just get out and get in paid for it. So $25.75 is what I would get. Now, I'm just showing you guys the examples of what can happen, right? I'm not telling you these are the best choices for you. So I would get $24,575. Now, you can see that's a lot more than my initial investment. I would still be up because of the premium that I'm receiving compared to just selling them at a loss. Now, I can also do an in-the-money one, which will give me a lot more premium. If I do the, I'm going to show you what an in-the-money looks like. Just to give you an example, I leave the investment up there so you guys can see my total investment compared to how much I would get. Now, if I do the in-the-money for the same week, this time let's choose $43.50. Okay. Now, let's do 500 shares times $43.50. So that means I would receive, if assigned, I would receive $21,750 if I get assigned. Now, how much is the premium? Let's see. If I were to send this order on Friday for 500 shares, I would get $26.90. Okay, $26.90. Wow. A lot more, right, if it's in the money. But remember, there's always a break-even price as well. So you got to pay attention to how much your total outcome would be, right, on the investment. So 23, oops, you know what, I suck at math, so I better use a calculator for this one. When it comes to, adding one number on top of another, blah, 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 750, right, plus 2690. I don't want to give you guys wrong numbers. See, I was already wrong. There you go. Oops, there you go. This is how much I would get back if assigned. 24,440. Now, this is a great way of kind of getting out because you're looking to get assigned. Your chances of getting assigned are greater if you're selling in the money covered calls. Now, I would still come out with a little bit of a profit, but that's even better than selling with a loss. Now, that's just the way I would do it. Now, if you think NIO is gonna, come back up again, then you can stick out, further out the money, and your chances of getting assigned are slimmer, right? But let's say for 500 shares, a $70 call option, $365 on a week, it's not too bad. And if, let's say, NIO goes up to $70, the capital gains would be tremendous, a lot more, right? And you see the premium, you do get a lot less, but I mean, that's if you want to keep on, NIO for a little bit longer, if you want to write some covered calls and maybe afraid to get assigned. Assignment to me is not a bad deal because at the end, we're here to make money. Now, there's times where it does go a lot higher than, past the strike price, and you end up losing extra gains that you could have made. That's happened to me before. But I always look at the positive things. You're making money regardless, right? It's better than losing money. Now, that's just what I would do, okay? Now, NIO, I believe it's going to go higher. Yes, it is. But at this point, I feel like it's already priced in on the earnings because right after XPeng had their earnings, it jumped about $10. And right now, it kind of sold off a bit. But XPeng, it jumped about $10. And what happened afterwards, if you guys paid attention, NIO, people started buying NIO like crazy. It started going up before the earnings. Now, that's how I feel that it's priced in. I think it's already priced in on the earnings. So I feel if NIO has great earnings, I think that it can probably sell off because the price that it was going to jump, it's already priced in because people started buying it before the earnings based on XPeng's earnings. But I could be wrong. That's just my opinion. But either way, like I said, I like NIO for the longer term. I think it's going to do great things. In the meantime, this is the sole reason I like to buy in increments of 100, 200, 300 shares at a time because it gives me that extra play that I can make money while holding a stock that I like. So again, not to brag, I think the biggest losses has been Disney. Let me show you my biggest loss here that I've had. Everything else is pretty much being down and not selling, just sticking to my guns. This has been the biggest loss I've had. This one I'll never forget. I'll show you. So with Disney, I ended up buying a put option, right? $128 put option, and back in August 2019, I paid $2,600 for it, and I ended up selling it and got only $650. So I lost a little, like $2,000, well, close to $2,000 right there. And I'll never forget that. That was my biggest loss with options. Now, being down on the account is not a loss until you sell. That's why I don't consider these losses. I just consider it being down on the account. Now, hopefully this video gives you guys a better insight as to what I like to do when I'm down on the account, the strategies that I like to do, and stuff like that. But if you guys have any questions, any comments regarding anything else, just leave a comment down below. And until then, I'll see you guys on the next video.